Harper Dennis Hobbs, or HDH as we're more commonly known. We are principally a retail advisory and consultancy company, and we've been around for nearly 30 years. We have a specialist travel retail division, and we work in three main ways with our clients. First of all, with retail brands on their travel retail strategies. We also work with brands who want to get into wholesale in travel retail. And also we work on the other side with airports, working with them on an advisory basis, working with them on major projects, working with them on master planning, basically getting the best commercial return out of their spaces. So that's fundamentally what we do. Today, we're going to talk about watches. The watch market is really important in travel and always has been, mostly because of the breadth of the offer. So it goes right through from top luxury, all the names you would expect, Rolex, Omega, Cartier, so on, right through the mid-price section, and then into what are really quite fun, accessible priced watches as well. So there's really this broad offer. And that really reflects the type of people you have coming through an airport. And also it reflects that real kind of self-treating feeling that people often get in an airport, or they're looking for gifting to take to somebody on their travels or to bring home with them. So as an environment, it really works for watches, and there's not actually that many spaces where you could say that. It's actually fascinating how the watch market has been affected by COVID generally, or almost how it hasn't been affected. Watches of Switzerland, who are the largest UK luxury watch retailer, continually throughout 2020 had to keep reforecasting their forecast profits upwards because the market was so much stronger than they had expected it to be. When they posted their third quarter 21 results very recently, actually they were 6% up in the third quarter of the year, which is extraordinary when you think about the disruption that has been going on to retail generally. So what's driving this? Well, fundamentally, it's because there is still money out there, and there's a lot of people who love watches, collect watches, want to build up a watch wardrobe, and those sorts of people, they haven't been able to spend their money as much as they would on other things like holidays or other experiences, eating out or whatever. So actually, it's quite a good idea to invest in luxury watches. And when I say invest, it really is quite a savvy investment, because actually watches only go up in value. They're a really good place to put your money. People buy them as heirlooms. They buy them planning to pass them on to other family members. So it makes a lot of sense to continue to buy watches if you're into them and you have the money to do it. Although physical stores have been closed, actually, as in many different sectors, online has absolutely boomed for luxury watches, and that's where the big increases are being made, even though the stores have actually been closed. Obviously, the watch market in travel retail specifically has been really hard hit by the pandemic, because travel retail has generally been hit so hard with all of the stores opening and closing. It's been really difficult for anybody to predict the trading pattern, because all of these things are coming from government directives in different countries, everybody responding to the pandemic in their own countries. So that's been really tough anyway. And it's interesting because Watches of Switzerland CEO Brian Duffy was saying in the press recently that travel retail used to account for 30% of their business, but in 2020 that went right down to 10% of their business. So it's been really hard hit, even against this backdrop where luxury watches in general are booming. But when airport retailing does start with a vengeance again, which it will, watch sellers are going to have to be very thoughtful about how they approach business in the future. There are continuing threats, and the biggest one is supply and demand, because there is so much demand for luxury watches at the moment that it's actually very difficult for watch retailers in the airports to keep in stock of the best lines. And a lot of that is around the margin issue. The margins in luxury watches are very tight and get tighter year on year as the brands squeeze them. But percentage turnover fees in airports can get greater and greater. So it kind of makes sense for the watch retailers, if they have a big online business or a big downtown business, to think about selling the best pieces there rather than putting them into airports. So if you're going through an airport and you see that the watch offer looks rather depleted, that's possibly because for that retailer it makes more sense to sell their watches in a different environment rather than airports. Now, smart airports are now re-looking at the deals that they do with the watch sellers, and they're looking at the cash total, because we're talking big cash turnover here, and they're maybe taking a little bit less in terms of the percentage, but they are keeping their eye on the cash bottom line, and they're still making the money. And that's the way to make sure that airports are going to get the best range that their customers are going to want within their stores in the airports. Possibly the biggest threat to the watch market in UK airports, at least, is the removal of the tax-free benefit, which has happened post-Brexit. Now, no one has yet felt the impact of this, because actually all non-essential airport retail stores have been closed since Christmas. But when they do open, there could be a large impact, because these are expensive purchases, they're investment purchases, and many people travel with the thought of buying something and getting the tax-free benefit in mind. So you have to ask yourself the question, in future, if someone from overseas wants to travel to do some serious shopping, are they really going to consider coming to the UK when they know they won't get a tax-free benefit, or are they going to think instead they'll go to Paris or to Rome or to Madrid, where they will get their benefit? And I have to say that there's many in the UK airports market who are really concerned about this change that's been made. And we can only hope that at some point in the near future there will be a reversal, because it could be highly damaging. So the luxury watch market is changing with the times. Some of the luxury watchmakers now are creating smartwatches. Obviously, the rise of smartwatches and wearable tech in general has been huge. But traditionally, the horological watches have not really entered that market. However, now they're beginning to. So a good example of that is the Breitling Exospace, which is probably the only real luxury smartwatch. But Tag Heuer and Montblanc are also introducing smartwatches into their ranges at a more moderate price point. And by that I mean between about £700 and £1,200 per piece. So that's quite an interesting move forward for the luxury watch market. Frédéric Constant, who actually made the first horological smartwatch, are really finding their feet in that market now. And they retail for about £500 per piece. But these types of watches look like a traditional luxury or premium watch, but actually have the performance, or some of the performance, of a smartwatch. So it's quite an interesting hybrid of the two. Another thing that's changing in the watch market is brands are becoming more focused on sustainability, as they are in many other parts of the market. But in watches specifically, I mean, generally speaking, Swiss-made watches are relatively sustainable anyway, because, as I said earlier, people buy them to pass on. They buy them as heirlooms. Most watches last people decades if they've bought a decent Swiss movement. So it's not a throwaway purchase anyway. So there's an intrinsic sustainability in those types of watches. The lower price point and mid price point areas of the market can be more of an issue in terms of sustainability, because these pieces are then seen to be a little bit more disposable. But there are brands who are actively making sure that they're more ethically minded when they're producing their watches. So the brands like Certina and Nordgreen and Gekota are actively ensuring that their companies are potentially carbon neutral, or that they're donating a percentage of the cost to causes in which they believe. So there are ways that companies are making sure that they give back, which then makes it not feel such an onerous purchase in terms of its effect on the planet. And in terms of sustainability, one of the real positives in the watch market is the pre-owned market, which is actually growing at just as fast rate as the new watch market is, because, as I was saying before, these watches are increasing in value. They are investment purchases, and often some of the rarer pieces can now only be found pre-owned. So this is a really interesting market, which is great because not only does it mean people can invest in beautiful pieces from the past, but it's also more sustainable and not necessarily using new resources. There's also digital enhancements that will help the watch market at airports. Pre-browsing via digital means is going to be on the rise, so that might mean being able to browse the full offer online before travel. Also, a lot of brands now are bringing in augmented reality, where you can actually try a watch on your wrist before you purchase it in the comfort of your own home. So just ways to help the customers understand a little bit more about the offer before they get there and what they will be able to buy. Airports are increasing their click and collect models, so that you can actually purchase the watch before you get there and you're really just picking it up as you go through. And also there's a lot more home delivery options now, and all of these are based online, so it's just another way to support the business. So when travellers return and travel retail recovers, which it absolutely will, there's definitely a really positive market there for watches as long as supply can be kept up with. We're predicting that there will be a shift in the demographic of passengers coming through, especially at first, more leisure passengers, potentially less business passengers, at least for the first 12 to 18 months of any recovery. And those leisure passengers are very focused on self-treating and gifting, and so will be looking for items like watches to buy as a gift. Business travel absolutely isn't dead. Yes, we're all working much more on Zoom and Teams and doing virtual meetings and so on, but human beings like to meet each other and will continue to do so in the future. So and business gets done by people meeting and talking. So we will see people begin to travel again for business once some of the more strict restrictions can be dropped. It's going to be very difficult at the moment before the vaccines have been rolled out in most countries, but it will return. And when it does, that business traveller who has a high disposable income, who loves watches, generally speaking, will want to shop again. And as long as in airports the right offer is there, and all of the right key brands and the right pieces, so long as they're there in the airports on offer, it's absolutely going to be a booming market again for watches.